You have seen a perfect setup, order block trading strategy. It broke structure, it swept liquidity, and created some fair value gaps. And you decided to take the trade. Wasn't quite long, your stop loss get hit. And right now you are in a loss. What if I told you there are ways you can spot fake order blocks, fake CHOCH, fake support and resistance, and fake supply zones and demand zones? If you want to learn more about this, let's dive into this video. This is very important as a trader. It took me some time before I finally figured out how to avoid unnecessary trade setups. Now, if you apply this strategy, it's not only going to help you limit your losses, it will increase your win rate. Because when you eliminate a trade that was supposed to have taken you out, thereby you are going to increase your win rate. And in this video, I'm going to show you how to trade like the banks to take out that liquidity trap, where other smart money traders and other retail traders will fall into, and they will think that was a perfect setup. Now, this is what I mean. You have a sweet, beautiful uptrend, and then price broke structure, creating what? A CHOCH. A CHOCH in the form of sweep of liquidity, okay, and then a break of structure. Yeah. And by so doing, the market gave a nice order block. And this order block met all the three criteria of an order block: swept liquidity, broke structure, and created a fair value gap. What could be wrong with this order block? Okay. Then all of a sudden price came in and then takes you out. From there, is either it continues going higher or it reverses into your intended direction. How can you avoid this, and then how can you trade to profit from this knowledge? In my last video, I showed you how to spot out these fake order blocks, and there are real areas where the liquidity, the institution set traps. Now let me explain why they set traps there. Remember, for example, let's look at this area. Imagine this level. Wouldn't you consider this level a strong institutional area to sell from? Okay. Why? Because it created fair value gaps, it broke structure. Okay. So it makes sense that if price comes in here, you have to sell. This is what institutional trading is. They'll tell you you have to follow the footprint of the banks. But let me tell you that there are sometimes banks create a trap because they know a lot of people will be interested in that level and stop loss above to trade from there. So how do you spot this out? To spot this out, you just have to use two things. You need the forex calendar, and you need what? Your charting platform. In this case, you'll be using TradingView. Okay. Now, before you continue with this strategy, because I call it the Raba institution liquidity traps strategy. Okay. This has not been shown anywhere on the internet. This is the first time you are seeing this. And if you like this, make sure you hit that subscribe button, like this video, and then share this video to as many traders as you know. Now, before you continue, you need to make sure that these settings are done well. You go to your forex factory. Okay, your time zone must be within the same area time zone that you are, and your charting software, which is TradingView, should correspond with that time. In this case here, I live in Nigeria, so right now I have to change this to Lagos. Okay, +1 Lagos. Okay, so that the time will be the same. The time of news releases will be the same. Okay, so now this strategy is not about you trading the news. Just forget about that. Now, once that is done, you are going to mark out the high or low produced by high impact news. What I mean by high impact news are simply these news releases with red on Forex Factory. Okay, all this impact. Then we're looking at high impact news. Once you notice the news releases and market move, the market will leave behind a trap. Okay, that trap is in form of what? Highs and what? And lows. And most times, those movements will create fair value gaps. It will lead to what? A break of structure, giving you the perfect scenario to start selling from there or buying from there. So now, what do you do in this case? Once you notice this, because I have seen with experience that level most times will be what taken. If the market wants to continue this bearish move, it has to take out that high first. Once that high is taken, it may continue. And if price wants to keep pushing up, it has no regards to this. Okay, this order block is simply a fake order block. The CHOCH is a fake CHOCH. I'm going to do more videos on this fake CHOCH as time passes. What are you going to do? There are two methods you trade this. There are two methods. Okay, but in this video I'm going to share with you just method 1. Okay, method 1, and we have method 2. Okay, so by the time you see my next video on this, I will explain method 2. So method 1 is simple. This is what method 1 is all about. You are going to, once you identify this fake order block level, the highs and the lows, and even the order blocks around it, you are going to now start hunting for, looking for, in the case of a bullish movement, okay, for a bullish move, you will be looking for demand zones, okay, unmitigated demand zones, where you are going to take the price from that demand zone, okay, and your target will be that liquidity point. Okay, now this is contrary to what most people will say. They will be looking at this area as a very high probability zones of what? Shorting. But I am telling you that don't do that. If you do that, your stop loss will be taken. Okay, so what you need to be doing is simply trading from here to that zone. Be with the banks, because the banks, those with big money, will move price from this unmitigated demand zones. Once it's mitigated, they will move the price from here to that level. That will be your target. Okay, and that is what you are interested in. You want to be buying in this case, because once they key in their position here, they are trapped. Okay, and that's where the Raba institutional liquidity trap comes in. Their money is trapped. So what happened? Their stop loss will be taken. They have nowhere to go. I will show you in the example. Now, before you can execute that method 1, these are the few things you need to know in method 1. Okay. Number 1, the points you have to follow for method 1. Number 1, you identify the Raba institution liquidity trap. Okay, RILT. Once you notice that, this is what you do. You simply take your rate tool, mark that level, okay, and label it RILT. Okay, so that in the future, when price approaches this, sometimes it might be immediate, sometimes it might be in the future. I'm going to show you the examples. Once price approaches this level, or when you see this level, that level should be a target for you, regardless of whatever is being formed there, be it CHOCH, order block, supply zones, or anything. Regardless, that level have to go. Okay. Once you identify that level, you look for the true S and D zones. In this case, for this move, you look for a true demand zone, which is unmitigated demand zone. Once you get the unmitigated demand zone, you take your trade, okay, wait for price to mitigate it. Once it's mitigated, you identify a CHOCH or a supply and demand flip entry in the lower time frame to take the trade to the upside. Okay, take entry at IPA. IPA are simply the candles that fill up the imbalance. You can take the price, or you can execute once price start taking the liquidity before the IPA is being filled. What do I mean? Like in this case here, for example, this is a fair value gap, right? Okay. Now you can start taking this trade once this first eye is taken. Like here, once this first eye is taken, you can take the trade. That's what I mean by the first liquidity before the IPA fill. Okay. Whereas the IPA is simply this candle, okay, that fill up the imbalance with your stop loss above that IPA. Now, whichever way you want to enter, it is up to you. You have to back test this. Then your target is at the Raba institutional liquidity trap, which is RILT. Okay, that will be your target. So without wasting time, we are going to go to the chart. So right now, I'm looking at this month of November to illustrate, because it is a recent price action, to illustrate what I'm sharing with you. What I'm sharing with you has been my secret weapon, which I'm about to share with you for supporting and liking this channel. Now, we have 1st of November, for example. Yeah, these are the news releases. Then I want to just look at this on Euro USD pair. By 3 p.m., okay, 3 p.m., the USD, there was a news release on manufacturing PMI and then the job opening. Do not bother about this, we don't need that. So what you need to do is to go to your calendar. You can see this is November 1st, okay, by 2 o'clock. This is 1 hour time frame. Yeah, you can see 1 hour time frame. By 2 o'clock, this news was what? 3 o'clock. Okay. Now, this candle here, this is the news here. This is 15:00, 3 o'clock. This is the eye here. Now, after the news release, what you need to do is to mark out that eye, which I will do that right here. And I'm going to label it RILT. Now, if you look at this, you can see that we have an order block created. We have this low, a CHOCH created, this low, taking liquidity. Price took that with this low and created a CHOCH. Okay, we have a CHOCH here. Okay, and it further created multiple break of structure. Okay, now a lot of smart money traders will be positioned here for a sell. Okay, but this is what I will do. I will simply take this smart money trap because it will extend to the order block that has been created there. Either you use the order block IPA or whatever POI. This POI here is simply a trap. Do not be trading this. Okay, so while other smart money traders will be looking here as a potential areas to start shorting from, which in itself it has all the criteria of a high trade setup. Is at the premium zone, has some level of imbalance here, okay, and then creating a break of structure. So what you need to do is simple. You are going to look at your left. Before now, we have unmitigated zones here. Demand zone. We have unmitigated demand zone here. So you wait for price to come in here. You'll be buying from here, and your target will be this RILT. Okay? Your target will be the RILT, which is the institutional trap. Now, our entry now will be to go to the 5 minutes time frame. And what are you looking for? You are looking for a CHOCH, a change of order flow, or you look for what? Supply and demand flip entries. So, without wasting time, I'm going to play this. Now, in this case here, we have this is a supply zone that push price to the downside. Now we have it invalidated. Okay, what invalidated it is this demand zone. So your entry will be here. This is where your entry will be. Long. You can put your stop loss below this or below this, whichever one. It works fine. But I'm going to put it here. I like being safe. Okay, I like being safe. So where will be your target? Your target will be up here. That RILT. This is for a 1 to 7 hour. If you are taking it at this point, this is 1 to 10. Okay, it all depends on your risk appetite. I don't like too much risk. Okay, so I put it at the point of invalidation. Because if price goes below this, then my setup is wrong. So we wait and see. You just have to be patient. Okay, don't FOMO into the market. That's the last thing you want to do as a trader. Do not FOMO in, because we need price to mitigate this level here. So let's play. You can watch price come in there. You can put in your limit order, and you have to be patient, please. Let's extend this, and then let's watch price. Now, do not FOMO. Okay, wait for your trade setup to come in. Now we have our entry there. You can see that's our entry. Then you can go back to your 1 hour to speed this up. Okay, that's our entry there, and we want to target this level. So let's keep playing. Now you see what happened there. Price went straight up. After taking that liquidity, what happened? It came back down. You would have gotten out at this level here. Okay, once price take that liquidity, that's your exit, and before you know it, price continue going down. Everybody selling here didn't even have a chance at all. Okay, did not have a chance. So this is one example. Example number 2. In this example, we are going to look at this following day, November 2nd. Now, we have news report here on the 2nd. We are going to look at FOMC, which is at 7 p.m. FOMC, which is at 7 p.m. We will look at here. I've already taken my time to mark them out. This is 7 p.m. This was the high produced by FOMC. So, you mark that level as what? RILT. Okay? So, what do you have to do? So, in this case, we have our demand zone here. These are demand zone right here, which I'll be interested, because this demand zone here is a true zone to look for buy, created a break of structure, and so on. So now I'll be waiting for price to come in here to target here. So as price approaches that level, now price is in here, you go to your lower time frame. Now in the lower time frame, I'll be looking for CHOCH. Okay, I'll be looking for CHOCH. So right now, you just have to keep playing price till you see your entry. Now we have a CHOCH here. So we have a CHOCH here, and that's giving us a fair value gap. Okay, you enter at the full mitigation of the IPA. You can put the stop loss here because this is a new low created. Okay, and then where is your target? You just simply go to your 1 hour again, your 1 hour, and then you target the RILT. Okay, that is the target there. This is giving 1 to 17 hour trade. These are trades I took. Okay, so in that case, you allow price to move, tap you in, and then as you see, tap you in there, and then price headed up. taking out that high. Okay, this has a superior win rate than any strategy I've used. I'm giving it out for free because you are going to have to mark out those levels yourself. It's not an holy grail. I don't want to use the word certainty or guarantee you profit, but all you need to do is backtest this and see if that works for you.